Good evening, investors. Welcome back with me, Madhveshwari, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with the evening updates from Bursa Malaysia. Bursa Malaysia maintained a strong upward trajectory through mid-afternoon on Thursday, buoyed by robust buying interest and a positive reaction in the central bank's latest monetary policy decisions. The FBM KLCI climbed 12.12 points to reach 1,710.34 by 3:15 p.m., a significant rise from Wednesday's close of 1,698.22. The rally coincided with Bank Negara Malaysia's Monetary Policy Committee announcement to hold the overnight policy rate steady at 2.75%. The decision provided a sense of stability for investors who were already encouraged by a rebound in regional markets. Market breadth remained healthy, with 532 gainers outperforming 495 losers. Trading volume was active, with 2.01 billion units changing hands valued at 1.95 billion ringgit. Leading the charge among the blue chips were banking and utility heavyweights. Maybank and Public Bank both added 6 cent to reach 11 ringgit 72 cent and 4 ringgit 90 cent respectively, while Tenaga Nasional Berhad also gained 6 cent to close at 14 ringgit 22 cent. In the broader market, consumer giant Nestle was the top gainer, jumping 1 ringgit 50 cent to 108 ringgit 50 cent, followed by Malaysian Pacific Industries, which rose 70 cent. The financial sectors was the standout performer of the day, with the financial services index surging 82.86 points. The plantation index also saw gains, rising 48.16 points, while the energy index bucked the trend, sliding slightly by 3.72 points as oil-related sentiment remained volatile. Among active stocks, Zetrix AI and Tanco saw modest gains, while Bumi Amanda edged lower. On the declining end, Fraser and Nif and Hong Leong Financial Group saw the sharpest pullbacks. Overall, the index ability to hold above the 1,700-point threshold suggests a resilient underlying uptrend, supported by domestic policy certainty and improving sentiment across the Asian region. Now for some local economic news updates. A significant majority of Malaysian exporters are bracing for operational disruptions as the conflict in the Middle East enters its 6th day, threatening critical maritime corridors. According to a survey by the Malaysia External Trade Development Corporation, over 60% of local exporters expect to be negatively impacted by shipment delays, skyrocketing insurance premiums, and increased freight costs. The survey, which captured data from a broad spectrum of businesses, including micro, small, and medium enterprises, mid-tier companies, and multinationals, found that 39% of respondents currently export to the region, with the UAE and Saudi Arabia being the primary destinations. Preliminary results indicate a growing trend of orders, cancellations, and rising costs for raw materials, particularly oil-linked plastics. In response to the effective closure of the Strait of Hormuz following recent military escalations, Medtrade has mobilized its regional offices in Dubai, Jeddah, and Cairo to provide real-time coordination for stranded cargo. Medtrade Chairman Dato Sri Rizal American emphasized that the crisis is a litmus test for the agility of Malaysia's trade networks. He stated in a press release on Thursday, the feedback gathered from our recent exporters questionnaire highlights the urgent need for a shift from traditional trade routes to be more resilient and strategically adaptable. He urged exporters to bypass the most dangerous zones by rerouting goods through alternative hubs, such as the port of Salalah in Oman or the port of Fujairah in the UAE, and exploring land-based transport where possible. To mitigate the immediate physical risk to personnel, Medtrade is pivoting its promotional strategy. Reza American noted that the agency is replacing high-risk physical trade missions with virtual businesses matching sessions via its virtual e-biz match platform. A central pillar of the government's mitigation strategy involves a rapid intra-ASEAN market realignment by leveraging the upgraded ASEAN Trade in Goods Agreement. Medtrade aims to help exporters redirect their trade flows toward more stable, geographically closer markets within the Southeast Asia. Medtrade CEO Abu Bakar Yusuf added, "While we anticipate operational strain, we are positioning Malaysia as a reliable alternative supplier for our trade partners seeking to diversify away from regional risk." He also underscored that the agency's immediate priority is resolving the double-ended blockade currently affecting Malaysian cargo through direct intervention and West Asian logistic hubs. Exporters are also being advised to consult financial institutions immediately to secure comprehensive insurance coverage against war risk premiums and the potential of cargo abandonment. Still on economic news, the Malaysian government is currently evaluating the potential for cost-push inflation as the ongoing conflict in the Middle East continues to drive up global oil prices and the transportation costs. Deputy Economy Minister Dato' Muhammad Shah Abdullah informed the Dewan Negara on Thursday that the situation is being closely watched, particularly given Iran's role as a major global energy producer. The Deputy Minister explained that the primary concern lies in the ripple effect that energy prices have only on the broader economy, because international trade and domestic supply chains rely heavily on logistics. Any sustained increase in fuel costs typically forces businesses to raise prices for consumers. Tensions in the Middle East certainly have the potential to exert pressure on fuel prices, as trade activities involving imports and exports depend heavily on logistics. Higher fuel costs could translate into higher prices, he said during a parliamentary question and answer session. This is what we refer to as cost-push inflation. Responding to concerns regarding Malaysia's economic exposure to the Middle Eastern market, Dato' Muhammad Shah emphasized that the government is utilizing verified data from multiple international sources to assess how broadly these impacts might spread. While the global energy market remains volatile, he reassured the House of Malaysia's internal inflation figures have remained manageable thus far. He added the nation's inflation rate is currently still under control. These developments are being monitored and the government remains committed to ensuring the well-being and of the rakyat. The statement comes as policymakers attempt to balance domestic price stability with a global environment where supply chain disruptions and energy spikes are becoming increasingly frequent. The government monitoring efforts are focused on ensuring that any necessary policy interventions can be deployed quickly should the conflict escalate further. Up next, we have some corporate updates. Sunview Group Berhad's wholly owned subsidiary, Fabulous Sunview Sendirian Berhad, has secured a major contract for the engineering, procurement, constructions and commissioning of a solar photovoltaic power plant in Bintulu, Sarawak. Valued at a fixed sum of 289.71 million ringgit, the project was awarded by Malak of Evergreen Sendirian Berhad for the development of the facility at Sungai Likau. The development Malak of Evergreen is a 70% owned subsidiary of Tua Utama Sendirian Berhad, which is in turn wholly owned unit of the energy giant Malak of Corporation Berhad. The contract marks a significant milestone of Sunview as it expands its footprint in the Sarawak renewable energy market. In the statement to Bursa Malaysia, the group expressed confidence that the project will enhance its financial position over the coming years. The company noted in its filing, barring an unforeseen circumstances, the project is expected to contribute positively towards the future earnings of Sunview and its subsidiaries for the duration of the project. The upward award comes at a critical time for Sunview, as market analysts have recently highlighted the need for the company to replenish its unbilled order book to ensure long-term earnings visibility. This latest win is expected to provide a substantial boost to the group's work pipeline through 2026 and 2027. The project is part of a broader trend of large-scale renewable energy developments in East Malaysia, as the state of Sarawak aims to significantly increase its solar capacity by 2030. Sunview's involvement in the Bintulu plant reinforces its position as a key player in Malaysia's ongoing energy transition. And finally, wrapping it up with some technology updates. A major attempt to pass new cryptocurrency laws in the US has hit a wall after banks rejected a compromise proposed by the White House. The disagreement centers on the Clarity Act, a bill designed to create clear rules for the digital assets industry. President Donald Trump, who has made crypto reform a priority of his second term, publicly criticized lenders on social media, accusing them of trying to undermine his agenda. The main conflict involves rewards and interest. Crypto companies want to offer incentives to attract customers, but banks fear this will cause people to move their money out of traditional savings accounts. Experts warn that if these rules aren't balanced, banks could lose up to $500 billion in deposits by 2028, making it harder for them to provide even loans. We are not going to allow them to undermine our powerful crypto agenda, President Trump posted on a Truth Social, signaling his frustration with the banking industry resistance. The White House tried to broker a deal that would allow rewards only for certain transactions like peer-to-peer payments. While crypto firms were open to this, banks remained opposed, arguing the risk of deposits flight is still too high. The American Bankers Association stated that while they want the bill to move forward, the risks to economic growth and financial stability are real if policymakers don't get this right. With the 2026 midterm elections approaching, time is running out. Supporters say the bill must be signed by July, or the window for reform will likely close as lawmakers shift their focus to campaigning. Additional hurdles, including disagreements over anti-money laundering rules and the ongoing conflict in Iran, have further complicated the bill's chances of becoming a law this year. Well, that's a wrap for Closing Bell Updates with me, Madhaveshwari. Thank you, investors. We shall catch up in the next session. Goodbye.